Welcome back, everybody, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. We have so much to talk about today. We have economic turbulence across the globe, mostly in Europe right now, in the UK. Of course, the US is having issues as well. Seems like this is a daily event, but we want to talk about that. We want to talk about this event down in Texas that's happening in a couple of weeks. We also want to talk about how you can attend virtually. We'll mention that in a few minutes. And we'll also talk about our guest speaker that's just been announced today that's going to be joining us. So that we'll get to all that. But first, let me go through the stories. Then I'll talk about those features of EconomicPreppers that's happening down in Dallas. And then I'll come back and I'll wrap it all up and try to put all these pieces together in a big picture. So first, let me share my screen as always. Well, not always, but today, or lately it seems. Let me share a bunch of stuff that's going on in Zero Hedge and talk about the articles. And I'm going to be brief. There's about 8 or 10, but I want to highlight the ones I wanted to talk about, try to put it together in some kind of orderly fashion. But here's one. And the ones I highlight in purple, that's the ones that I'm only going to be talking about the headlines so I can move on quickly to the next one. But here's an example. Hedge funds keep betting wrongly on the peak of the US dollar. They don't know when it's going to be. They're all guessing. Second one, 10-year yield sourced to 12-year high after dismal 2-year auction. So the two things that they talk about are the 10-year and the 2-year interest rates. And when they have an auction, they introduce new treasury bonds that they're trying to sell at an auction. And if the price goes higher, that means people want a better yield because they see more risk in this market. So if you look at this chart, the 2-year treasury, the numbers just spiking incredibly of late. It's just going way higher. A very ugly auction that was expected at a time when pretty much everything is blowing up. And sure enough, the 10-year yield spiked to session highs after results from today's dismal auction were announced, pushing the 10-year as high as 3.9%, highest level since June of 2010. That's the important takeaway. Is it's the highest numbers in the last 12 years. Zooming in, that's a tough chart to see. Here we go. It's looks like that's a monthly chart. Yeah, this is a monthly chart. So this peak here is this is 2020. 2010 is way back here. So you can see that it was okay until it started to creep up in the 2018, 2019, came back down in 2020. Then it's just taken off and it's hitting near new highs. So that's enough for that one. Okay, Nomura, which is an economic research team, they're forecasting a terminal rate. They're trying to guess when the Federal Reserve is going to stop raising rates. They're guessing 5.25% to 5.5% and now expect rates high of 75 basis points in November, December, followed by 50 basis points in February and March. They're guessing. It's pure speculation. They don't know. They draw interesting curves, but this is all forecast out to 2024. Who knows what the economic climate will be? That's their best guess. Global gloom. So here we go. The world markets plunged to start the week as global currency crash hits max pain and beyond. So now we're starting to have foreign exchange issues. Latest FX turbulence, the extreme move in bonds that's happening in Europe, especially in Europe. The pound tumbles after the Bank of England issues a brief toothless statement over foreign exchange turmoil. Let's see this one. The pound flash crashes 500 pips. I think that's half a point to record low amid global foreign exchange carnage as things start breaking. So this is what they call the Dixie. Okay, it's Bloomberg's version, but the DXY is the dollar chart, and you can see it's extremely highest it's been in quite a while. And then we could see other charts in here, but expect an emergency central bank meeting this week. That would be. I don't know if that's England, like it's the U.S., I think, where panicking officials do everything they can to contain the dollar and to undo the tremendous damage the Powell Fed has unleashed on the world, because in the end, it's always the same. So they don't know what to do. They don't know how to react. They're trying to hold it all together. Here's 7 policy options to address the sterling crisis. That's, again, the UK, the British pound, the pound sterling. You can see that the UK number just started plummeting over a weekend. They could do 7 different things. I won't go into all those things. The UK's monumental policy mistake, how bad will it get? There are calls for the Bank of England to jump in with a 100 basis point rate hike, or 1%, and currency intervention to stem the crippling currency losses. Then even bigger picture, When will we get coordinated central bank intervention? This is premium, but first sentence tells me all I need to know. The speculation among traders about whether central banks might launch a coordinated intervention to weaken the dollar. So basically, the dollar is too strong. They don't know what to do about it, but they know that it can't last, and it's hurting European markets and other markets too. So last Zero Hedge article, the main issue in the economy is that there are two generations of market participants who have witnessed only expansionary policies. That's what we've had since 2008. Markets and politicians are so accustomed to easy money that even the slightest normalization causes havoc around the world. So if you start to raise rates even a little bit, it drives people nuts and things just start breaking. Recessions are not caused by central banks raising interest rates. They are the result of years of excessive debt, malinvestment, and reckless risk taking. All right, so this leads me to the dollar milkshake theory. If you have not heard of the dollar milkshake theory, that is from Brent Johnson. He envisions a scenario where the U.S. dollar sucks up liquidity from other currencies and countries worldwide. There's a good video from the Jay Martin show. It's worth watching. I'll try to remember to link it, but if not, here is a clip of it, or just a snapshot of it. Jay Martin show. He did a great job. He also interviewed Andy Schectman a couple times in the last month. Another big silver guy who wound up talking to Robert Kiyosaki last week. So lots of good conversations happened with Jay Martin. And so let me drop out of here. And it's time for me to talk about how all this comes together. But first, a word about this sponsor and our guest speaker that's happening down in Dallas, Texas, and how you can attend virtually on October 8th. Hey, everyone. I'm really excited to announce our first special speaker at the Economic Preppers event in Dallas on October 8th. I'll share my screen and announce it that way. It's none other than Bill Noble of Token Metrics. Now, Bill, if you're not familiar with him, you should be following him on Twitter. Bill used to work for Goldman Sachs, Charles Schwab, Morgan Stanley. He left all that legacy financial stuff behind a few years ago. Then he joined Token Metrics. He's the host of the Token Metrics YouTube channel, where they do a lot of crypto research and a lot of discussions. But Bill, he's going to be speaking. Here's his Twitter. He's going to be speaking at the event, and he's going to be there pretty much all day. I mean, he's probably going to show up Friday night as well. But he's local to Texas. Hope he brings out a few friends from Texas. But if you're a fan of Bill or Token Metrics, come on out and listen to Bill. He'll probably be speaking around lunchtime, and then he's also going to be a part of our panel for the AMA. So, and again, if you want to attend and you can't be in the Dallas area, we'd love to see you live. But if you can't, go to economicpreppers.live. Just follow the link below here, and there's virtual tickets too. So it's live is $197 and virtual is $150. We're making it very easy for you to attend. You can get the live stream, you get the workbook in a PDF form if you can't attend live. We hope to see you in Dallas in one way or another, and we're looking forward to Bill and the rest of us talking to you soon. Okay, so there's that. I mean, I think this event is going to be fantastic. Of course, I'm biased, but I think it's coming together nicely. Patrick and Dylan and myself have really put everything together. We just finalized the workbook that's getting printed. We've got everything coming out. I'm really excited about the event and talking about these kinds of big events. And I know we're putting together an agenda and we're putting together a workbook, but we leave a lot of space in here for like about an hour or two of just ask me anything time questions, those questions and just interactions and breaks. And of course, we have the VIP happy hour and breakfast where we can talk about pretty much everything that's going on in the world and how it all pieces together, because it's happening very, very quickly. So here's my take on it and why you need to be your own bank. Okay. And this is like the banking crisis is upon us. Okay. That's really the headline of this video and probably what we should have titled it. Hopefully I remember to do that. But this is the implosion of banks, because the financial system that we've had for 100 plus years with the central banks in the Western world, with the Europe and the US and the dollar as the reserve currency. They changed it in they confiscated gold in the 30s. They changed it with Bretton Woods in 1944. They went off the gold standard in 1971. They had the global financial crisis in 2008, and we're here again. And like they can't even raise interest rates 1% without something breaking massively. So how do you manage this? What can you do? Well, the best thing is that get yourself the least amount of exposure to this system. Now, if you have this is not financial advice. This is just my thoughts. Just a guy on the internet talking about what I'm going to talk about and what we're going to talk about down in Dallas. But this is my opinion, and we're going to share lots of opinions. But the banks are they're teetering on the edge again with like if you move 1% of an interest rate and these kinds of things start breaking the bond markets, which is huge, the derivative market, the stock markets, the equities markets, the real estate markets, they're all so intertwined. And a 1% move, it shouldn't be that drastic, but yet we have all these things where governments are nationalizing utilities, and the banks are getting closer and closer to needing bailouts, and then they may wind up with a bail-in, which I've talked about before. I'll try to remember, post this up here, but a bail-in is when they take your funds, which you think are fine in the banks, and they seize them and they just start paying your creditors. That basically that's not your money anymore. All that fine print that you sign when you set up a bank account, it's buried in there. It comes from the Dodd-Frank Act of 2010, which happened after the 2008 Too Big to Fail episode with the global financial crisis, where everything almost imploded back then. So here's where we've landed, is that we've gotten soft. Okay, we've gotten too lax in watching over our wealth. We have money. If you work for somebody, which is probably 90% of my audience, you get your pay every couple of weeks. It's direct deposit into a bank. So, I even see videos about Zelle, like people don't want cash anymore, allegedly, in these commercials. Put all your money in a bank because it's so safe. Or is it? So the bank, they want you to put the money in the bank. They want you to pay your bills in the bank. They never want you to touch cash. They're going to be introducing central bank digital currency, so you have to deal with that. Basically, they want you so entrenched in the banking system, the financial system, and trusting it so much that you don't have an alternative. But the important thing now is you need to set up your own alternatives. You need to become your own bank. And that's what we're going to talk about down in Dallas, Texas on October 8th. A lot of crypto people talk about this already, but there's lots of different ways to store your wealth, store your buying power, your value, how you've changed that labor into an asset of some kind, what assets you choose to store it in. Cash, it doesn't appear to be the right thing, because look at the inflation rates, right? Like if you had put cash under the mattress 2 years ago and pulled it out now, it'd be worth about half as much as it did back then. Just look at the grocery store or the gas station as Exhibit A and Exhibit B of that. So what can you do? You got to get out of these systems. You have to learn to be your own bank. But with that becomes responsibility. You have to keep, it's great to say that you're your own bank, that you're independent, but what happens if you need a car loan or a mortgage? Well, we're going to have new systems for that. You have to keep your wealth secure in your own way. And we're going to talk about that down in Dallas. We could talk about using a cell phone as a wallet, using a ledger or Treasure, a cool wallet, paper wallets, all kinds of different crypto wallets, even laptops and other devices that you can consider using. But there's a general rule of thumb that I pretty much tell people who ask for my opinion. It's just an opinion, but I don't want to put more than, say, 2, 3, 4% of my let's just say it's my crypto portion of my wealth savings. I don't want to put more than 2 to 4, maximum of 5% of my crypto investment bucket of my finances into security. So in other words, if I only have $10,000 to start with crypto, and I want to buy Bitcoin and some altcoins that I like, how am I going to store it? I need to have that figured out. So there is a video on my website on LitecoinLeader.com. It's about using a cell phone as a wallet. That's a great low cost option. And that's what I would strongly recommend. Again, not financial advice. This is what people have asked me, and I just tell what my story was. When I started, I used a cell phone because it's a couple $100, and you can store up to, you can, for a couple $100 versus $10,000. It's not a large investment. $100 versus $10,000, it's 1%. Even if it's a $200 phone, it's maybe 2%. That's if you buy the phone. You may have a smartphone laying around that you could reuse. I would not go further than that. Like when I get to like a larger number, then I look at it like a laptop or something. But you got to make up you got to figure out your own plan for being your own bank, because you have to get your security. You have to, you're getting financial freedom, yes, but you have to worry about your security, and it's your responsibility. You have to under your control. All these things matter. You need to figure out your answers to those questions, how you want to secure your wealth safely. And I'm not just saying just crypto is the only answer. I mean, there's other options too. That's why this logo exists. You may have a house, and if you have a house 2 or 3%, and it's your home that you want to stay in for years, great. Now, again, not financial advice, but something you may want to consider if you can is pulling some of the equity out before the prices start going down, which everybody knows they're going to happen. Now, it might be too late to do that because bankers may not allow equity lines of credit or HELOCs or second mortgages. That might be harder to get, or the interest rates are going to be higher. But like if you have let's just say you have a $500,000 house and you only owe $200,000 on it, that's $300,000 of equity that you can't access right now without liquefying it in some way. Now, to do a new mortgage, you're probably gonna have to spend thousands of dollars, but it may be worth it if the house price goes from 500,000 to 350, your equity's been cut in half. So if you want to get access to all your equity or as much as you can, something to consider. Again, not financial advice, just thoughts, just deep thoughts from mine. That's the kind of things we're going to talk about down in Dallas. Okay, so there's that. There's the crypto. There's storing it in gold and silver. You can do that as well. But the bottom line is the current financial system is broken and it's teetering on collapse, as you can see by a 1% move or the financial markets. And what's going on with Brent Johnson, the dollar milkshake theory, I think we're getting very close to it. Like we're getting a melt up where all these other countries have to get dollars, and then the dollars are all going to come back to the U.S. If things get nationalized, then prices, if all the dollars come back to the U.S., prices will inflate. And how are you prepared for that? So you need to be prepared, not scared. That's what Dallas is all about. So if you want to attend, ticking across the bottom here, I mean, just go to EconomicPreppers.live and you just get your ticket. It's $197 to attend live. We have a few rooms left. It's right here. If you want to try and get a room, we have just a few left. Or if you want to attend virtually, you can't make it out to Dallas, and we fully understand that. If you want to attend that, we've made a lot of great options for that, and it's available, and it's only $150 for that ticket, and you can get everything as if you're there. I know it's not, it's obviously it's better if you're there and you meet everybody and there's context and everything, but if you can't make it out, we're made that option available to you too. So all that's there. You're going to meet Bill. You're going to hopefully meet another speaker that we're working on. We'll see if we can get someone else there. But no matter what, between the three of us and Bill, you're going to have a great time. You're going to learn a lot. You're going to get your workbook either physically or virtually. We're going to do some giveaways. It's going to be a lot of fun down in Dallas, Texas, and we're looking forward to it. So it's only a week and a half away. So make your preparations now. Hope to see you there in Dallas. But with all that said, I'll close the door on the bureau, say file leader one more time, and I will talk to you soon. Take care.